Good morning, traders. It's 8:03 a.m. Chicago time on Monday, the 22nd of August, 2016. Thanks for joining. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. I'll start out by reminding you that I would appreciate you hitting the like button on YouTube. If you're watching this on the Stage 5 website, just go to the bottom right corner, click on YouTube, which takes you to the YouTube channel, and then hit like there. It helps me get clout with YouTube with new product releases and server speeds and so on to get a better broadcast. Anyway, overall, the market is in a flight to safety mode. Looks like risk is moving or assets are moving towards safety, with the U.S. bond up um, almost 0.5%, followed by the euro bond. The British pound is also up, the U.S. dollar index is up, and the 10-year note is up as well. What's down is crude oil, down about 2%, trading at 48.05, down $1.05, $1.06, was down as far as $47.65, which is about 40 cents lower than where it is now, followed by the DAX, which is down 0.72%, Euro stocks, gold, E-mini, Dow, Russell, S&P, and the Euro FX follow. And that's the universe I'm watching. Overall, the news, the big news is Stanley Fischer, the Fed vice president, says the Fed is nearing its targets. He says he's Janet Yellen's right-hand man. He thinks the Federal Reserve is close to full employment and 2% inflation. The two parts of its dual mandate, the Fed's biggest monetary policy conference of the year, is taking place. The annual Jackson Hole Symposium begins Thursday, and Yellen will speak Friday, and that's going to be a very important event. Crude oil is lower following a note from Morgan Stanley that is a downbeat. The head of energy commodity research at the firm said that too many headwinds and logistical challenges to a meaningful production freeze deal. Basically, this gentleman is thinking that there's not going to likely be a supply curb. Of course, the Reserve Bank of India has a new governor. Not sure how that affects us. And Pfizer is buying a Medivation for $14 billion, and that's really the bulk of it. Other than that, I'm not seeing much on the wire. Yeah, I'm not seeing much in the wire. Let's take a look, since it's Monday. Let's take a look at the week. Let's start out with today. Today, the calendar is fairly clear. Remember that September futures, WTI futures, expire today, so you have to make sure that you roll your crude oil contract. The front month crude oil contract now is October. If you're using IRT like I am, you need to do a full data download to update your back adjusted data for crude oil before you do any analysis. But pretty much clear calendar today, not much on deck. Expecting it to be another boring Monday. Tomorrow, Tuesday, we're looking for German manufacturing PMI, Eurozone manufacturing and services PMI, as well as the German services PMI. We're also looking for U.S. manufacturing PMI prelim for August, new home sales, and Richmond Fed. We also get the Eurozone consumer confidence. And then Wednesday, we get German GDP. We get U.S. Housing price purchase index, existing home sales, the crude oil inventories, as well as distillates and gasoline. And then on Thursday, we get the key figures will be the German IFO business climate. You want to pay attention to that. That's at 3 Central, 4 Eastern. That's a mover. And then on Thursday morning, we get U.S. durable goods and U.S. services PMI. On Friday, We're looking for German GfK consumer confidence. That is taking place at 1 Central, 2 Eastern, right at the European Treasury Open. Uh, Eurozone M3 money supply. We're getting UK GDP as well as business investment prelim. And then on Friday, we're also getting U.S. core PCE, GDP annualized, advanced goods trade, and University of Michigan final. And then we're also getting Fed's Yellen on Friday at 9 Central, 10 Eastern. You'll want to pay attention to that. That's basically how the week is shaping up um, to play out. Let's take a quick look at what we expected Friday to do. Friday, we at the time of the trader bite, the market was trading at 2178.75, and the expectation was for a potential quick test of the point of control at 2180, 50 or so, 2180, yeah, 2181 maybe. It's hard to read. And then I was looking really mainly on Friday for a turn down. Remember, on Thursday it could not breach this gap zone, and it could not come into this island day that we had last week on Monday. And so the market started turning down pre-market. So the expectation is it would likely test down, and the target for a down test was 2171.75 area, 2172, and essentially I thought we would. The expectation was that it would happen over waves, as you see here. But the overall idea on Hypo 1 on Friday was a test down. Now, on Hypo 2, the expectation was for a test down into to test below Thursday's range to find buyers, and then I was looking for a push up, and Friday was looking, Hypo 2 was looking for a test through the gap zone, and then finally to start breaking into Monday's range. What had actually happened? Here's what actually happened on Friday. It immediately went down. Pretty good push down. There was a driver here. We're seeing a driver in Delta, not so strong, but we're also seeing a driver in price. This was a caution longs right off the bat. We could not get a swing low until 2173.75. So this is one of the bigger opening swings, which tells us that intermediate to higher time frame OTF was likely to be active and to be cautious and not be stubborn about mean reversion type positions, that the market's likely to swing wide, and it did. It swung down to 2172.50. Then it chopped around. It built this very high kurtosis, kind of a high volume node here near the lows, and the expectation, even though we saw the impulsive pull and continuation on a bigger time frame, the expectation was for it to pull back towards this VWAP mid and retest the low. But when it started to break through the mid, all bets are off on the short side. Essentially what we had done that morning by the morning was to cancel this out. Now this is a 2-tick Renko, and I can fit the whole day into a small portion of the screen, which tells me that there isn't too much going on, kind of like the same we see here on Thursday. And this is unfortunately the how the market has been lately. It's been, remember, a Renko bar is not formed until you've passed the range that you've selected. And it's just saying that there isn't very much happening here. But overall, it makes this quick move. So if you were short and you got blasted a little bit, it was very, very hard to recover for several hours. It just sat in a consolidation zone, built this high volume node down here. shifting the point of control up above the mid, back into the prior day's range. It tested the prior point of control. So essentially what this did is it stopped a few ticks ahead of the target that I had shown for Hypo 1. So Hypo 1 took place within the first 20 minutes of trading, and it was over. It missed the target by about 3 ticks. And then from there, it just bounced back in the day. So the expectation once we do that is a test of value high if the value area is valid. And for this day, for Thursday, the value area is valid, and that's where we get the 2183 test. I expected it to go higher. The expectation was for it to push to about 83.50. It couldn't get past, and what we have is a point of control at the top of the range with a weak high into the gap zone. So what I was looking for is a continuation on the reopen on Sunday night, which we got. We got the continuation, and where did it go? It went right to 2184.50 before rotating down. Now here's what's interesting. So that's basically the auction on Friday. Two big moves, or three big moves, one down, one up, one down, and then a grind up to close. Several setups on Friday, about 4 setups, and only one of them actually worked. It's not the easiest. It's not a walk in the park, but if we look at what we've done since Friday, so here's your down wave up consolidation, and normally you would expect a continuation. Nope. Instead, it drops, retests below the prior session's low, which was 2178 here, and then just grinds up. It's not the best of sessions, but remember Friday was options expiration. I don't know if that had anything to do with it, but overall, it just wasn't fun. The volume was a little bit higher than normal, 1.23 million versus 1.09 million, the current point of control of volume. Here's what it did on the reopen yesterday. It started to drift down, then it went into this dead man consolidation thing that we've been doing now for in the Asian session for quite some time. There's just nothing going on. Then the European session kicks off, or the movement resumes. We test up, pull back, have a small continuation just by 2 ticks to the 84.50 gap zone high, and then boom, right, the corrective move is immediate, and then we have a continuation, and now we're struggling with a point of control here. Look at this low. Look at how weak this low is on the overnight profile. I mean, there was there's just no taper on the volume at all. So when I expand this and we look at the volume, you could see that it drops from 60, it goes from 66.88 traded at 76 to about 10% of that at 640 to about half of that at 376. There was just no taper here at all. It's very abrupt, and in my opinion, this is likely to chop around here at the point of control and is likely to retest the overnight low, and that's the thesis that I'm going to move forward with coming into the day session. And that's basically how things are shaping up. So we have a multiple highs at the 84 when you consider the extended hour. We're not able to get through this gap zone yet. We have not tested the gap zone from above, so it remains in place on my charts. And we have the overnight low at 2175.50 with the point of control 2177.50, just 2 points above, which is in line with the MC point of control. There's just a lot going on in this area. And so the expectation, the primary expectation, I wanted to actually, before I get into that, I wanted to just take a quick look at the notes. This is the notes here. Let's shift this back and out of the way. This is the notes here. The notes have had some quite amazing moves lately. You can see here the gap on Brexit pushed to new all-time highs, a drift down, and it's been consolidating for quite some time since July 12th. with the point of control right at 3209. And what the notes are doing this morning is they've just opened and they've immediately gone into a one-time frame. They've been one-time framing upwards from the open. So to me, it's consolidating towards the MC point of control. There's the treasuries or the 10-year notes specifically. You see that in the bonds too, are really waiting for news. They're in this holding pattern and like most airplanes over O'Hare Airport here in Chicago. Um, it's they're just waiting for further instructions. But overall, they've tested that all-time high, and they've tapered nicely on the all-time high, and are moving towards this high volume node in this region. And you could see that the MC profile matches the composite. There's not much in this, which tells me that there's not much in this area. If we go back, it's new high territory. So it's as far back as I look. There's nothing out here other than what's happened here recently. So a lot of strength in the treasuries still, but consolidating and very, very choppy. On the open here today, the expectation, since we're trading down here, the expectation is a quick. I'm expecting a quick back and forth like we see on Mondays, and I'm expecting a test of the overnight low. I'm expecting it to rest and then potentially start moving up to 2181 and a quarter. I'm not expecting much range today, but I am looking for that test below the overnight low and potentially below below Friday's range as well. Wow, it won't draw any dashes, so it could dip down below like that before it starts going. So how is that information used for trading? The reason I do this and the reason and the way to use this information in trading is to understand that you have a weak low and there's a good potential for a test on the overnight low. That alone tells you that not to quickly jump on a long and let the market auction down and test that overnight low first. Then look to see how much interest there is. How well offered is it? How much is it printing on the bid? To see how much interest there is below the overnight low and to continue to push towards 2172.50. And so I'm not blindly buying this thinking, well, the point of control is up or whatever your bias is, even if it's long. I'm not going to hop in here and take, 7 points of heat while I sit in the trade looking for it to come back. So that's the kind of information I'm looking for. What should I expect as the market opens? On a secondary hypothesis, I'm expecting if we get a strong up test that sees resistance and it starts to rotate lower, then I'm expecting it to drop to that 2172, bounce back up, and then start making its way down to 2169.50 and potentially through to the next gap zone down. This is unlikely unless something changes this week. This is an unlikely scenario. I'm expecting a test down and a push up. The overall drift is likely to be up, but I'm open to it. I'm going to look for a push up towards 2181 and a quarter and any sign of failure. Just because it failed, and I point out that it failed does not mean I was able to catch the high tick on the turn. It's rare that I catch the high tick on the turn. That's just not a realistic way to trade. Anybody that tells you they can catch the low and high of every swing is probably good at magic tricks as well. So this is just a plan. This is just a plan to help you figure out what the market is likely to do. What you do to enter, it really doesn't matter. It could be you're using fibs to figure out confluence. It could be a moving average crossover entry or some sort of an overbought, oversold oscillator or something. I'm agnostic to what you use. I just use the tape prints and how the market responds to bids and offers that are sitting in the book to figure out what areas I should enter because I have a scalping background. But you could use whatever works for you. It doesn't invalidate the thesis, and coming in without a thesis or coming in without some sort of an idea of what the market might do just puts you at the whim of how you feel, and trading off of how you feel is not a long-term profitable plan, in my opinion. That's all I had for you for today. I posted part 3 of the webinar series I did for Futures.io on my Twitter feed and on my website. I don't think it was too much of a hit. The subject was trading habits. It's not an exciting subject, although it is very important. It's kind of like when you talk about psychology, people's eyes glaze over, but it is where the difference is. This is what we spend in prop. This is what we spend most of our time getting people to adapt and change, is how they think and their mindset and their attitude and their habits and so on. And eventually we hope that that leads to profitability. I think the topic is very important. It was one that was selected by a survey. The next topic is trade execution, and that takes place in September. Anyway, I'll catch you tomorrow. Good luck. Take care.